Economic jargon assert anything owned by a country, individual, or other entity that has a monetary value. Capital goods, goods used to produce other goods rather than being sold to consumer. Cartel, businesses, organization, or countries which have grouped together to influence the price or supply of goods and services. Closed economy, an economy closed to international trade with no exports, imports, or capital movements. Crowding out, a fall in private sector consumption and investment as a result of increasing government expenditure. Deficit, the total amount in which money spent is more than money received. Deflation, a fall in the general level of prices. Devaluation, a reduction in the value of a country's currency where the country has a fixed exchange rate system. Dumping, selling goods abroad at a price lower than that charged for the same good in the domestic market. Elasticity, elasticity, the degree to which a demand or supply is sensitive to changes in price or income. Externalities, goods and services whose costs and benefits are not properly accounted for by the office. Fiscal policy, government's taxation and expenditure policy. Flat tax, the same rate of income tax is applied to all levels of income. Free trade, a policy of non intervention by the government in trade among countries. Goods, physical objects that people are prepared to pay for. Inflation, persistent upward movement in the general level of prices together with the related drop in purchasing power. Investment, in economic theory, the production of capital goods such as goods, factories, and machinery. In common usage, expenditure on the acquisition of real or financial assets. Invisible, the current account component of the balance of payments accounts which are not physical goods. Liability, any form of debt. Loose policy, this applies to fiscal and monetary policy and describes policy when it is set at a level to stimulate further acceleration of economic activity. Monopoly, an industry where there is only one seller and many buyers. Monopsony, an industry where there is only one buyer but many sellers. Nominal value, the money value of any economic variable. Oligopoly, an industry in which there are only a few sellers but many buyers. Open economy, an economy in which there are no restrictions on imports and exports, nor on the movement of labor or capital across the border. Portfolio investment, investment in equity securities and debt securities. Protectionism, a policy that favors the use of tariffs, quotas, or other import restrictions to make domestic products competitive with foreign imports. Recession, a decline in overall economic activity, usually defined as two consecutive quarterly falls in real GDP. Structural unemployment, long term unemployment caused by changes in the industrial, occupational, or demographic structure of the economy. Surplus, the extent to which revenue is greater than expenditure or that the value of assets is greater than the value of liabilities. Tariff, a tax applied to imports. Tight policy, this applies to fiscal and monetary policy and describes a policy which is set at a level to reduce the rate of growth of economic activity. Tradables, goods and services which can be imported or exported. Underemployment, the employment of workers in jobs which either do not offer sufficient hours of work or do not fully utilize their abilities and skills.